Hello, it's Mr. Swartz. Let's do the next section, Unit 2, Section 3, Spending Plans. Spending plans. What is it? A tool to help manage how you spend your money. Why use one? Spending plans are used to help track where your money is going, identify income and expenses, meet financial goals. Another name for a spending plan is a budget. Income is money earned. Expense is money spent. How do you make a spending plan? Well, you track it. You track your income and your expenses, your past records, see the things that you've been spending money on. You personalize it for you. How do you keep track? Some people use paper, some people use their phone, some people use apps on their phone, some people use a computer, some people use spreadsheets. You have to decide how often you're going to keep track of it: once a week, every 2 weeks, once a month. Then you have to categorize it. Where do you spend your money? Create categories for the ones that you spend your money on. Money in each category. You look at your past spending, average percent of money you spend on certain things. Determine how much you're going to spend based on what you spend in the past. You keep track, you keep records, you write it down. Paper, pencils, receipts, all of those things. Just keep track of all your items that you spend money on. You evaluate and adjust. Did you overspend? Did you overestimate? If you spent more than you should, then you need to figure out what you're going to have to spend less on next time. If you overestimated, maybe you can spend more money on certain things. Spending plan goal. The main goal is to have a zero balance. Income greater than expenses is a net gain. Now, let's be honest, this is good, but having more money in your pocket than not is a gain, which is a good thing. If you spend more than you lose, that's a net loss, which means you're in debt, which is very bad. You don't want to be in debt. That causes a lot of stress for people. A net gain, more income than expenses. Net loss, more expenses than income. Spending plan. Income, salary and wages, tax returns, interest earned on savings and investments, money from others. Expenses, food, housing, utilities, transportation, savings, insurance, clothing. Spending plan example: mowing the lawn, $10. Birthday gift, 15. Total, 25. Expenses: movie and popcorn, 15. Snack and drink, 5. Total, $20. Is it a net gain or a net loss? Well, I would say it is a what? Net gain. If you'd like to buy a new shirt for $15, Kenny? Nope. It'd be a net loss. The spending plan is a tool to help people track their money. It's a great thing. You should all do it. Spending plan tracks income and expenses. A net gain is more income than expenses. A net loss is more expenses than income. You need to track your past income and expenses, personalize what you do, determine anticipated spending, track your actual income and expenses, then evaluate and adjust. Very smart, especially when you were very young. Very good.